All right, good afternoon. I wanted to do an update on TSLY, the Yield Max Tesla Option Income Strategy ETF out there. Back about a month ago, did a little video on TSLY just to cover how it's constructed, how it works. Really wasn't giving you my opinion necessarily of whether it's going to go up or down, but I want to tell you where it's been the last 3 months or so, just so you can get a sense of, is TSLY something that I want to be in or not? Let's take a quick look and let's go through this, because there's a lot of people out there talking about TSLY. I probably won't do another update on this for a couple more months, but I just want to get it out there. I saw somebody else trying to sell covered calls on it too. I'm going to tell you why this is all just, in my opinion, a terrible idea. All right, so let's jump into TSLY and take a look at how it's been performing the last 3 months. And let's take a quick look at the price action. So here's where we were. We'll go back 3 months on 620. So back on 620, TSLY itself was selling for $17.54. Just to have it again, been three months ago. I put this data together on 9/20 this week. So I put all of this together. So 3 months ago, $17.54 on TSLY. And then, as we know, looking at Tesla itself as well, Tesla's been on a pretty good roll for a while now, and it's not far off of its highs. Now, depending on when you're looking at this, price may change a bit, but on 620, Tesla itself was sitting at. Let me take a quick look here. Tesla itself was sitting at 274.45, and then on 9/20, this week, Tesla was just off of that, sitting around 262 or so, so pretty flat on it. But TSLY has not held up quite as well. So TSLY on 9/20 this week was selling for $14.46. So TSLY itself is lower. Now, Tesla was lower by a little bit, but TSLY on a percentage basis even lower, 14.46. That was on 9/20. I'm not even considering what may have happened on Thursday and Friday of this week, and we know TSLY is down in the 13s now, so it continues to just fall further as you go. So let's see, though, with all its great distributions, how great of an investment this thing might be. And again, I'm not even going to talk about the fact that it's down even lower than this now, but on 9/20, 14.46, down from 17.54 on 6/20. So there's the price action on Tesla and TSLY. Let's look at the distribution. So what's happened in these 3 months? Well, the distributions for July, August, and September would all have been recorded. So if we had entered on the 9th or on the 20th of June, these would have been the 3 distributions that you would have gotten. Now, there was a big distribution in July, $1.06, almost $1.07 a share. It's a little smaller distribution in August at 83 cents, and then an even smaller distribution in September at 58 cents. So if you really thought, hey, I'm going to get 90 cents to $1 every single time, well, that's been wrong as well. So as TSLY falls, you're not going to get as big a distribution here. So you're only going to do well in a pretty flat to upward market, and then you're going to significantly underperform Tesla itself. So there's goods and bads to this, but totally, you would have taken $2.48 a share on distributions. And if you think about it just from a distribution standpoint, hey, $2.48 on something that was selling for roughly $17 at a time, hey, that's a 14% return in 3 months. Pretty good, right? 14% in 3 months. Fantastic. Let's all get crazy and go out and buy TSLY, and let's start making a buck. Oh, I'm sorry, it's not a buck anymore. It's 83. Oh, no, it's not 83 cents. It's now 60 cents. Who knows what the next distribution is going to be? But my guess is it's going to be even less than 58 cents next time. you can only distribute so much based upon what you're making. And if you're trading options on this, options on a asset that are falling are going to give you a decent covered call, but it's also going to significantly impact that synthetic call long or synthetic long option position that you have. That's going to continue to lose money at a pretty rapid rate. So that's going to eat into the distributions because you're going to be taking losses on the synthetic long position in Tesla as they do over about a 3-month period. And then they're selling weekly covered calls on an asset that's been declining for the most part or not doing a whole lot of anything. So there's your distributions, 248, man, great, 15% return in 3 months. Let's all go out and buy it. So let's take a look at how well this thing has really performed. Well, let's say we purchased 1,000 shares back on 6/20 at that $17.54. Current stock price as of 9/20, not as of when you're watching this video, was $14.47. So the change in stock price was a $3.07 loss. The stock is down to $13.32 as of the recording of this video. So we're down more than $4, but we'll just ignore that for now. So we're down $3 on the change in the stock price in TSLY stock, but I got all these great dividends, $2.48 a share. Okay, well, your total gains with the distributions factored in is $3.07 minus the $2.48 in distributions that you've gotten. So you've taken a 59-cent loss, or at 59 cents a share, you've lost $590 on this stock. So bottom line is, this is really not set up for you to be successful long term. Now, if you bought in at the absolute bottom at $12, what is it? I think the absolute bottom was in April at $12.58, and you're at $13.32 now. So you're only up $1. So you're really not, you've got to have timed it right. If you bought any other time than that, you could be in anywhere from $16 to over $18 a share. You've taken a pretty significant hit in your share price on TSLY to date. So unless you bought in at the exact perfect moment in April on that 2 or 3 day span, you're down in your shares here, and the distributions aren't really going to help you and overcome that. And some people are thinking, well, you know what, maybe I'll just go out and I'll write covered calls on this. Okay. Writing covered calls on an asset that goes down in price is not exactly the best strategy either, because your underlying continues to drop. But I'm going to generate more income. It's not weekly options, so they only have options that are coming out roughly every so often. There's only 4 dates even available. If you were writing the 26 day options right now, your stock's selling at $13.32, so you're down. But let's say maybe you want to sell the $15 covered calls. You're going to get about 8 cents for that. Okay, 8 cents. Okay, TSLY dropped 57 cents on Friday alone, but yet you're okay with a 26-day covered call making 8 cents. Your 8 cents covered calls isn't going to save you on this particular stock. So here's where we are on TSLY, just giving you a sense of where it's been the last 3 months. And I didn't even take into fact that it didn't drop even more on Friday. So if we head into a difficult period for Tesla, you're going to continue to lose on here. You can sell all the covered calls you want on TSLY itself. Okay. Now, once again, you're going to restrict any upside that you may get. So even if Tesla does climb and TSLY climbs, you screwed yourself even worse, because now you've got a covered call for 8 cents or 10 cents or something on TSLY. If 8 cents or 10 cents on this thing is what you want, you're missing the point on TSLY. And if you thought you were getting $1 or 90-cent distributions every month, you're not anymore. The distributions on TSLY are far lower than that. It's only been up there, once in a blue moon. So You got to be careful. I'm not saying it's a complete disaster, but it doesn't look too good. And if you've owned this thing for the last 3 months or 4 months, you're down on your overall position. And if you've owned it even longer and got in near the beginning, but if you bought this thing anywhere between $16 and $17 a share, you're down. And the way this is designed is you've capped your upside completely. So you will not be able to benefit as Tesla rises because you've capped your upside. However, your downside is full risk with Tesla dropping. So if Tesla drops or Tesla drops, either one, you share the complete downside, only offset by any covered calls you're writing on a declining asset. If it moves up, you've capped your upside completely and you're making no gains in the underlying, and you're capping any gains by selling these, and you're distributing all of the income that you're generating. So in fact, every time you distribute the money, the stock price is going to fall. So it's going to get rid of any gains it has. So the stock really can't go up. It's only going to slowly decline as any leveraged type ETF or ETFs that are going to distribute will do. Some months you're going to do okay, but as a long-term strategy, this is probably not one that's going to yield you a whole lot. Anyway, there's a quick review on TSLY. Wanted to take a quick look at where we have been the last 3 months and see where we are. We will do an update on this maybe in another 3 months. It's not really worthy of my time a whole lot, so we'll do some of that. If you like this video, go ahead and click that like button. If you're not a member here on the YouTube channel, please subscribe. We've got great stuff coming out, some pretty cool trades that are heading out there. We are at an all-time high in my portfolio, even with the market falling this week. We are right on our all-time highs, having a great month. So if you want to follow what we're doing, go ahead and check that out in the links below in the description. All right, everybody have a great rest of your weekend. Take a look at TSLY, but I would not look too close, and you're not going to solve your problems writing any kind of crazy covered calls against a crappy declining stock. Okay, you're better off just letting this thing go. Let's see what happens. Maybe you can buy at the lows here, and you're going to be okay, but you got to be careful where you buy it. All right, everybody take care. Have a great rest of your weekend. Good luck in trading. Take care, everybody. Bye-bye.